So once again, Wall Street did exactly what Wall Street always does. SoFi reports earnings and they beat it into the ground. It was clearly a better earnings call than a lot of other of our favorite stocks out there, but yet some of those stocks are running. And of course, there's SoFi going down once again. So let's talk about all that today, right after you like the video, if you like getting the truth out the hype, because that's exactly what you're going to get today, guys. I know it's frustrating. I know sometimes the stock can be frustrating, but you have to keep the bigger picture in mind. You have to understand a lot of the nuance that's going on in regards to the earnings as well when we're talking about SoFi. And of course, there's always a lot of noise around SoFi, a stock, for whatever reason. Again, I'm not going down those rabbit holes again, but nonetheless, this is something that you've got to learn to manage. So this is a video that I released to my group right after the earnings call went down. You know, I kind of reviewed everything, kind of put this together for them. And I wanted to share that with you guys there so that way you guys had my thoughts as well, which if you want videos like this and commentary like this about all the different earnings calls of stocks that I own, along with learning valuation and price targets and everything else involved in being a great long-term investor, and you're ready to get serious about that, make sure you check out the pinned comment for my group where there's a lot of videos like this that we release. I try to release 2, 3, 4 a week around all kinds of concepts that just, I don't know, the video would get, 500 views here on YouTube, but, in the group, it'll get more than that. That's just part of it down there. If you want to learn how to invest, check it out. It's the pinned comment down there. And again, I'll talk more about it at the end, but let's jump into the video right here about SoFi's earnings. All right, guys, so let's talk about SoFi's earnings call there. I just wrapped up everything in regards to that. I know I'm a little bit delayed compared to a lot of other folks. I'm sure somebody's already got a video out there on YouTube about it and everything, but you guys know I don't like to give reactions there. I need time to not only go through the slide deck and everything else, also time to listen to the call. And of course, I like to listen to it at 2x speed, right, wrong, or indifferent. That's kind of like to do it. So I kind of like to let the earnings call roll a little bit. So that way, whenever I do jump on the app and push the button there, I can push the 2x speed, once it's complete there. So let's talk about the earnings here for SoFi. Again, it was another big beat and raise quarter. It was growth across all the segments. That's very, very important. Even the tech platform is expected to grow. I understand it didn't grow this quarter, but they still expect it to grow overall in their guidance. They guided to growth for this year. I think it was 10% or so for the tech platform. That's not a lot. I understand that. But they don't expect much, and they addressed it later on in the call. At the very, very end of the call, they pretty much said they don't expect a lot from the tech platform until 2026 at a minimum there. Now, I want to address something that came up right there in the group because a lot of people are, or maybe some folks are worried about the fact that, tech platform is not growing, therefore they're not going to get a fintech multiple. You need to understand and know that you just need lending, traditional banking, to be no more than 50% of the business. So that whole other side is not just made up of the tech platform only and nothing else. That can also be loan platform business, financial services, obviously the tech platform. So there's lots of things that make up that mix over there for it to be a quote unquote fintech. So yes, the tech platform would be great too. I agree completely. And I understand it got a lot of hype out there on YouTube, not here on this channel, but it got a lot of hype out there on YouTube in regards to, oh my gosh, if the tech platform doesn't get there, they're not going to get a fintech multiple and a lot of other things like that. It's not true. You got to understand what's the difference between, what traditional banking and what actual fintech is and what it isn't. And as long as the mix is 50% or more over there on that, kind of the fintech side, I don't care. It doesn't matter to me what the mix is or anything else of that nature. They're also going to start offering crypto. Now, it all needs to be worked out. We didn't get any sort of detail. I'm sure there's lots of regulatory things. There's lots of things I'm sure Noto is going to make sure is in place before he does it. He doesn't just jump in anything and activate something tomorrow. So that's definitely a positive, even though for me, it's really not that exciting. But I understand it does fulfill a need for their members, so it makes sense. And if I was in their spot, I would do it too. I just personally don't like the volatility and the kind of crowd that comes along with that. And of course, there's going to be a lot of regulation. I understand the current administration is taking down a lot of the regulation. Doesn't mean it won't come back there in the future. And then, of course, we also have the accounting piece as well that continues to change every single year, sometimes more often than a year in regards to crypto, how it's accounted for. So that continues to evolve. It's not a predictable model at this particular stage. So, we're seeing that in some companies' earnings, right? Huge, misses or huge beats. But a lot of it driven by just simply the price of Bitcoin at the time and nothing to do with the performance of the business itself. So that's kind of a part that I don't really like there. But again, it's good overall. It's definitely, I would have done it if I was management too. So I'm not saying that at all. You're continuing to see, and they didn't really talk about it a whole lot. They talked about it individually, but the big picture takeaway is margin expansion continues virtually across the board. That's really hard to do, especially in the banking finance sector. It's hard to do, but yet they are doing it quarter in and quarter out quietly. Again, it may not be a huge jump, but 2% one quarter, 1.5% the next quarter, maybe a nice quarter, 2.5% over here. Oh, back to, 0.8% over here. Add that up over the course of a couple of years and you have massive margin expansion, which of course means more bottom line profits in the future. So that right there was nice to see across the board, across really all segments. That's massive to me as a shareholder and especially looking long-term with the stock. Again, it was another bank along with a big bank saying consumer credit is just fine. As a matter of fact, Noto said they're seeing their credit profiles actually improving, not deteriorating like the media narrative and like everybody else talks about. They said the consumer is strong and just fine. But guess what? That doesn't make for a very clickable article or video, so it's probably going to get glossed over or just completely ignored. You have to ignore the noise. The consumer is just fine despite what the news says and all the tariff noise and just everything else going on that's been going on for the past 3 years now, where everybody just had you scared to death. We're falling into this great, depression of some sort. But yet, there's record profits everywhere across the board. I don't know. You tell me, do you listen to the banks that are giving you the real deal, or do you listen to the media and the narratives that get you to click on and stuff like that? I know exactly where I go, and it definitely isn't to the media. None of it. Either side. Doesn't matter. Not touching it. Noto also said he is not concerned outside of a major recession, which nobody sees coming. He didn't say it was coming. He didn't say a possibility. He was just saying outside of that scenario, we really don't see anything that's going to slow down the business or the consumer anytime soon. So again, all good signs. Now, maybe the biggest number to me is SoFi getting close to 30% growth in revenue per year. They didn't get there. I believe they guided for 24 to 27, I believe, which was an increase in guidance from, I think, 23 to 25 or 23 to 26, something of that nature there. But they're getting close to that 30% number. Now, for context with that, Palantir guided for that 30% number this year. Obviously, Palantir is actually ahead of that number, and I think they're going to beat that number, but you get the point. It's growing at a very similar clip to some of our favorite companies, all the while improving their profitability underneath. Obviously, it's not getting the same multiple as Palantir is. Obviously, it's not the same hype or anything else of that nature, but I'm talking about performance of the business, which is what matters. And you're getting great performance out of SoFi in the end. Now, they are planning to expand, and this is probably where the big growth is going to be, planning to expand the loan platform business outside of their credit box, meaning they can do it for more customers. And remember, they're not holding on to these loans, so it doesn't lower their credit quality any in regards to their lending business at all. So they basically said they turned down $100 billion in business because it didn't really fit their box in regards to what they do credit-wise. So that's a lot of money that they can immediately go after if they expand that. And remember, they don't have to hold it. It's not subject to all the different requirements and all the different regulations and all the different everything that they have. And so far, the clients have been very happy with the business that SoFi has given them. And even if people want to say, oh, no, they're not, and all this other stuff like that, they're paying above price. They're paying a premium to get these loans from SoFi. So that right there to me tells me they're not only delivering for their customer, they're over delivering for their customer out there, the other institutions using these. So that 100 billion in business, obviously they're not going to get all in one quarter, but the point being, it's a lot of money, meaning there's going to be a lot of growth. And that doesn't include the growth within their own segments that they own and that they absolutely do, they thrive in their core business. So there's a lot of growth that could very well be there in the future. Kind of goes right along with them sandbagging. He's now out there saying, oh, it's $1 trillion there and stuff like that. No, they gave you the number of what they turned down. Hey, we're going to go after that here in the future. And at that stage, it's kind of our job to just understand that I don't know how much of that they're going to be able to grab, how much of that are going to be folks that they actually, are able to make the loan and, take the process all the way through. But that's a lot of money left on the table, potential money left on the table that they can definitely go after. And so that right there to me is another growth driver into the future. Now, Noto clearly laid out that they are in an advantageous spot to take on any competitors. And he was obviously talking about Robinhood at that stage. It was kind of towards the end of the call there. So I like it. I like the enthusiasm. I think that was not much more or less directed at Robinhood and Vlad and the guys over there. And it was much more directed at the retail crowd who threw a fit about the fact that Robinhood's doing this and they're going to kill SoFi and all the different YouTubers and everybody else making this huge freaking stink about it. That's who I really think he was targeting this at. He's much more calculated than to simply just take a shot at another management team for no reason. I think that's directly where he was going at. But like we discussed here, I don't think Robinhood in general wants anything to do with the regulation, the decreased margins, and kind of the overall requirements of having a charter, which means I don't think Robinhood has anything wants to do with any of that. It would just really slow their business. So that tells me they are not direct competition to SoFi, which we discussed back then. It's kind of being reiterated right now. Noto is giving you the truth on that, hey, if they want to jump over here, it's a completely different ballgame than what they're dealing with right now. And he is 100% correct with that assessment right there. Now, I distinctly remember all the excitement around Robinhood adding checking accounts and how innovative it was, and I laughed. Not because I don't think it's a great thing for Robinhood. I absolutely think it's a great thing for Robinhood, no doubt. But it's not innovative at all. It is nothing new at all. Brokerages have done the same thing, the same types of partnerships and structures for decades now. Now, I believe Robinhood will do it very well. It will be real slick in the integration. Obviously, it'll just be very easy to use. Their stuff is very user-friendly. I agree there completely. But it's hardly new or innovative in the space. And all the big boys have had them for years, if not decades, on their platforms. So it's nothing new. It's not this crazy game-changing whatever that everybody seemed to make it out to be. It's a good move for Robinhood, agreed there completely, but that doesn't make it bad for SoFi. And you have to understand that, especially when YouTubers and people on X and everywhere else start making all these cross comparisons about this company taking from that company and all sort of stuff like that. When I hear that sort of stuff, I just go, wow, these people, I don't care how big the channel is. I don't care how deep they get into the numbers and how they can quote off the top of their head this earnings number and that earnings number and everything else. I go, they just don't understand banking. Because to me, when I look at SoFi and Robinhood, they are two completely different businesses and ball games altogether. And more importantly, Robinhood, when they enter and they have these checking accounts and everything else, my thought wasn't, oh my gosh, they're going to take away from SoFi. My thought was, that's really good for Robinhood shareholders. They're going to take more from traditional banks, which, by the way, traditional banks don't want those customers in the first place as checking accounts. We've covered that before. There's a video over there in exclusive videos that break down the exact banking sector and how basically what SoFi and Robinhood and all these other hot fintechs and great companies that we all love, they're taking business that JP Morgan and the other big banks don't want anyways. So it's good for everyone. I don't understand this mentality of everybody has to take from everybody else and everything's finite and there's just a zero-sum game everywhere. It's silliness. You got to get that sort of thought out of your head and actually analyze the businesses, actually understand them on a high level. And then you see that sort of stuff as just kind of a silly social media fodder to be ignored, and why I ignore so much of it. Now, overall, these were really good earnings, but what you are seeing is a business accelerating, guys. They're moving quickly, kind of like in the background almost, kind of on the DL per se, and they're doing that in multiple areas, but it's not coming tomorrow. It's not coming next earnings or anything else like that. They're laying the framework out for all this sort of stuff. And it's kind of like, I guess really the best example, and it may not be a good example, but you guys let me know. It's like building a house and laying a foundation for a mansion versus kind of laying the foundation for basically just a regular home, right? When you're building a mansion, it takes more time. So when you start both of them at the same time, and let's just say they're in two different areas or whatever the case is, but they're equate in terms of quality of area, just, you're not looking at them side by side per se, but you're looking over here, you're kind of driving past the mansion and, well, there's not a lot of progress it looks like going on over there. And then obviously you drive past the regular home and it's already got the frame up, which means the plumbing's done, the foundation's poured and everything else. And then you look at the mansion and you're like, wow, they hadn't even finished the plumbing yet. What's going on there? The foundation ain't even poured, and this other house over here, they've already got the frame up. When you're thinking through that, you're thinking, wow, that's a better house, better company building that house, a better whatever at that stage, because you're just viewing it simply based on progress and what all's up there, not what's actually done. Because when it's all said and done, the mansion is worth way more than a regular home. It just takes longer to build. So kind of for context for that, when you look at building a mansion or a high-end property of any sort, it can take 2 to 5 years, sometimes 10 years or more, depending upon a lot of different factors and stuff like that. But it's definitely not happening like a standard home would, which those, at least here in the US, those can be built in 3 months to 6 months all day long across the country, all the way up to 4,000, 5,000 square foot homes. If it's a pretty much standard, stick build home, that's very, very not custom, not a mansion per se. Obviously, it's a large home, but very, very different than what we would consider a mansion here. Those suckers can be built relatively fast. On the other end, it's not relatively fast. It takes a lot of time and a lot more work and a lot more energy. But of course, the payoff in the end is a lot more as well. Even if they're the same size, the custom home over there is a lot more. So right now, The numbers and the stock price aren't moving like others because folks are only looking at the frame over here on one side and go, wow, they've already got the foundation, the plumbing, and the frame already up. And then they come over here to this other side and they're just basically seeing the plumbing being laid and maybe part of the foundation's been poured, but definitely not nearly as much progress as it would seem as over here. But they miss out on what is being built. The end result will be versus a lot of others. Now, of course, they still have to execute. Lots of things can go wrong, just like on both sides. Just because you got a frame doesn't mean you're going to have a full house, right? A lot of things can go wrong at that stage. You can even build up a full house and then it burns down, right? 6 months later after you built it. All that sort of stuff happens. I understand that completely. They have to execute, but so far it looks great. And it's just basically for us as shareholders, just another standard beat and raise quarter for SoFi, now going on for like 45 straight quarters or something like that. It's not 45, I understand that. 16, 18, something like that. I hadn't gone back and counted, but it's a lot of quarters in a row of beat and raise. And this is just what SoFi does. Very, very happy with this quarter. Very, very happy with the commentary. Very happy with where they're going overall. Yes, I would like to see that tech platform moving too, but for me, it's a much smaller part and a much larger picture that's being done there. And I have no reason not to trust management that they might be able to get that picked up back again in 2026. So anyways, again, if you guys have questions, let me know. That's what I took from the call. And I don't know, just very, very pleased shareholders. So, and remember, if you want videos like that, 3 or 4 of them a week outside of YouTube, you want direct access to me to learn from me. If you want your free coaching, you want 5 courses for free, you want to be a part of the best 6, 7, and 8-figure Discord out there, everybody trying to help you out, become a better investor, stock analyzer tool, all kinds of things, guys. Just check it out. It's the pinned comment down there. See if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.